Hi there, very good morning. Welcome back to 80 Now. You're watching Market Cafe with me, Kanishka Sarkar. Over the next 1 hour, we'll take you through all the global and domestic cues that you must watch out for and also tell you about all of the stocks that you need to keep on your radar today. So let's get started with an eye on the globe and see how Wall Street fared overnight. And US stocks, they mostly climbed in Tuesday's regular session. This with investors largely brushing aside concerns over the US attack on Venezuela that was over the weekend. Now, if we talk about indices, the Dow Jones Industrial Average that surged nearly 485 points or about 1% to close above 49,000 for the first time ever. The S&P 500 that also notched a record close, rising about 0.6%, whereas the Nasdaq Composite that also ended higher the day by roughly about 0.7%, led by gains in technology stocks. The market breadth that was also strong with 9 out of 11 S&P 500 sectors finishing in the positive territory yesterday. Now, speaking of sectors, health and technology stocks, they were among the top contributors to gains yesterday. Among individual movers, it was the likes of Amazon, which is a member of the Magnificent Seven, and retail favorite Palantir. Each of them jumped more than 3% yesterday. Data storage names like SanDisk, Western Digital, Seagate, all of them stood out as some of the S&P's top gainers yesterday. Apart from that, looking ahead, the street will be watching for geopolitical developments very closely given what has been happening over the weekend. Wells Fargo Investment Institute's head of global investment strategy, Paul Christopher, in fact, he has said that maintaining social calm, that is going to be very crucial for the direction of US equities. And meanwhile, market predictions are now suggesting that traders are increasingly betting that US President Donald Trump could drive further international shakeups following the Venezuela developments, which is a key factor that could add volatility to the markets going ahead. So yes, that's how the market looked like yesterday. But now let's also talk about commodities and see how commodities fared overnight. Now, oil prices, they've fallen. Most of the commodities have fallen overnight. Oil prices, they fell as markets continue to focus on ample global supply and also weak demand outlook for 2026 that's outweighing all of the geopolitical noise that we are seeing. The US capture of Venezuela's leader that has also raised expectations of easing sanctions and higher Venezuelan output. All of these factors are adding to oversupply fears and also pressuring crude prices. If you talk about WTI, that was close to $56 a barrel, that's down about 1.5%. Brent was close to $60 a barrel, that's also down more than 1.5% for that matter. Now, if we talk about metals and especially the precious metal space, that has also seen some downtake. Gold has been close to $4,474 an ounce, that's down nearly 0.5%. Meanwhile, silver, that is close to, trading absolutely flat as far as, silver is concerned, near that $81 per ounce mark, that's down about 0.08%. But yes, it's copper which is actually leading the charts on the metal front. It's up more than nearly 2%, close to that $13,240 per ton level. So yes, that's about the precious metal space and all of the market action that we're tracking from overnight. But let's get tracking some of the top global stories this morning. Lots of stories trickling in. And first up, let's talk about what's happening in the US and with Trump. Now, Trump says that Venezuela will send up to 50 million barrels of oil to the US under interim authorities. Now, the oil will be sold at market price, and Trump says that he'll control proceeds to benefit both of the countries. Remember, this comes as a U.S. military operation that captured Maduro, Venezuela's president, and he's now in U.S. custody on drug-related charges. So that's the latest as far as Venezuela is concerned. But moving on, prediction markets, they are showing rising odds that President Trump might target Panama Canal and Greenland following the Venezuela operation, with traders betting on further international shakeups. Now remember, odds on Trump taking back the Panama Canal and controlling Greenland, they have jumped sharply, reflecting investor perceptions of a more forceful U.S. foreign policy and also military posture. Now remember, markets, they're also pricing in action on Colombia, Cuba, as well as Iran. Moving on, Venezuela's opposition leader, Maria Corina Machado, has vowed to return home very soon and call for free elections following the U.S. capture of Nicolas Maduro, saying that her movement would win convincingly. Now, Machado has praised Trump's actions, but the administration is instead engaging with Maduro's interim successor, that is Delcy Rodriguez, creating tensions within the opposition as well. Machado hasn't spoken to Trump yet since October, that is, and faces legal risks if she returns to power. And also, while talks continue over Venezuela's oil exports amid global concern. Moving on, let's get you the latest from Europe. Now, days after US President Donald Trump issued threats against countries including Greenland and Denmark, leaders from major European powers, they've expressed support for Denmark and Greenland in a joint statement saying that the Arctic island belongs to its people. The joint statement by leaders comes after renewed interest by US President Donald Trump, who's taking over the Danish territory. Now remember, the statement by leaders of France, Germany, Italy, Poland, Spain, Britain and Denmark read, and I quote, "Greenland belongs to its people. It is for Denmark and Greenland and them only to decide on matters concerning Denmark and Greenland," end quote. Moving on, let's get you some more commentary coming in from Trump. Now, Trump says that ties with Prime Minister Narendra Modi, they remain strong, but he has admitted to some friction over tariffs linked to India's Russian oil buying. Speaking at the House GOP retreat, now Trump said that India paid high duties for importing Russian crude, though some tariffs have since been reduced. He has also warned that Washington could raise levies further if New Delhi does not address US concerns, trying to trade pressure directly to the Russia-Ukraine war. Now, India has also rejected claims that it promised to stop buying Russian oil. Let's take a look at what he had to say.
I mean, I had India coming to me, "Sir, I've been waiting 5 years. We're changing it. We're changing it." India ordered 68 Apaches, and Prime Minister Modi came to see me. "Sir, may I see you, please?" Yes, I have a very good relationship with him. He's not that happy with me because, you know, they're paying a lot of tariffs now because they're not doing the oil, but they are. They've now reduced it very substantially, as you know, from Russia. We're getting rich because of tariffs, by the way. I hope everyone understands that.
All right, so that's Donald Trump on India and US ties. But let's move on and get you some updates from the world of sports. The Indian Super League is finally set for a comeback after nearly a year-long pause. The league has been on hold following the termination of the partnership between Football Sports Development Limited and the All India Football Federation, which left the ISL without a commercial partner. Now, what has followed was a year of turbulent year that is marked by uncertainty, protests, and multiple rounds of discussions involving key stakeholders. Now, there is some clarity. Union Sports Minister Mansukh Mandavia has announced that the Indian Super League will restart on February 14th, bringing relief to clubs, players, and fans across the country. Let's listen to what the Sports Minister had to say.
14 हमारे फुटबॉल क्लब के प्रतिनिधि के साथ विस्तार से मीटिंग हुई है और हम सब लोगों ने साथ में मिलकर निर्णय करा है कि आईएसएल लीग 14 फरवरी सैटरडे से स्टार्ट होगी और सभी हमारे क्लब उसमें पार्टिसिपेशन करेगी.
All right, then, good news for football fans over there. But with that, also time for a very quick break. We'll be right back to take stock of how the Asia-Pacific markets have opened up. Hi there, welcome back to ET. Now you're watching Market Cafe with me, Kanishka Sarkar, and it's time now to take a look at how the Asia-Pacific markets have opened up. And it's a rather mixed day coming in for the Asia-Pacific front. Now, if you talk about ASX 200, that's trading just about flat, up about 0.2% at that 8,700 level. Now, remember, this comes as the street is taking stock of Australia's inflation data. That's the domestic inflation data that has come in below forecast. The CPI has risen about 3.4% from a year earlier in November, and that has missed expectations of 3.7% and is also below October's inflation of 3.8%. So good data in Australia, and that's why we are seeing positive momentum. 8,700 is the level where ASX 200 is holding on. Apart from that, China's Shanghai, that's also trading absolutely flat, however, right now, but holding on to that shade of green, managing to hold on to that 4,080 level. So yes, the decent moves as far as Shanghai is concerned. Hong Kong's Hang Seng and Japan's Nikkei, both of these are witnessing a downtrend over there. Hang Seng is trading close to 26,570, down about 0.5%, whereas Nikkei, that's trading about 0.3% lower, close to that 52,358 level. So yes, that's about some of the key indices. If we talk about South Korea's Kospi Index, that's actually trading pretty well in trade today, up about 0.8%, 4,562. That's the level where it is trading. So yes, that's about moves on the Asia Pacific front. But if we talk about Nifty, well, Nifty did end at the 26,178 level yesterday, giving up that 26,200 level also, and down more than 200 points from its record high that we saw earlier in the week. So yes, that's about Nifty. But if we talk about the move that we are expecting today, well, 77 points of downtick is what the Nifty implied open is suggesting. So yes, a mildly negative start is what we are penciling in for the Nifty as well. So yes, looks like slightly weekday is what we are looking ahead at. But remember, yesterday market continued to extend its losses for the second straight day of trade, and the Nifty, that was tracked by Trent and big boy Reliance, which declined over 4% and also lost 1 lakh crore rupees in the market cap. Both mid and small caps, they lagged in trade yesterday. Oil and gas was the biggest sectoral loser, while healthcare and pharma, they saw some surge. Ashesha is here to take us through the details.
Well, yes, Tuesday turned out to be a soft day for Indian equity markets. Nifty ended nearly 70 points lower for the day. It ended well below that 26,200 mark. Nifty Bank was outperforming as compared to Nifty, but despite that, we haven't seen any major moves on both these indices. As far as individual stocks and sectors are concerned, something like Keynes Tech stood out. That one ended with a decline of nearly 4 to 6% in trade. IEX, on the back of that court ruling which came in, ended the day with an uptick of nearly 9%. Big boy Reliance Industries was also in focus on the back of several news pieces. That stock ended the day with a decline of 4.5%. Remember, nearly 1 lakh crore of market cap was eroded in Reliance Industries on the back of 4.5% decline that we saw in Tuesday's trade. In terms of individual stocks, remember, pharma stocks were shining bright. Something like Divi's Laboratories on the back of Citi report was surging. Divi's Lab, in fact, ended the day with an uptick of 4.5%. We had Wockhardt Pharma, Aurobindo Pharma from the entire healthcare space, which were buzzing in trade. In terms of other volume buzzers, Hindustan Copper, remember, copper prices on LME hit a fresh all-time high, and that is the reason Hindustan Copper was gaining 2.5%. We had Moil, which was reacting to operational data. Trent, which ended the day with a decline of 8.5% on the back of slower than expected growth that the company reported in the quarter gone by. KSH International, meanwhile, was reacting to its operational updates. The stock was up 3.5%. Bajaj Auto on the back of MK report, and MV Photovoltaic on the back of Jefferies initiating coverage. The stock ended the day with an increase of nearly 8% in trade. So yes, we had a lot of buzzers which were reacting to the kind of brokerage reports that we had and operational data for the quarter gone by. On the index level, it was soft, it was quiet. Nifty ended below that 26,200 mark, and as I mentioned, Nifty Bank was outperforming, ended marginally in the green.
All right, so that's all about the market action yesterday. Trent and Reliance, those were the key drags in the market yesterday. But which are the stocks that we are going to watch out for in today's trading session? Meryl is here with that list. Meryl, good morning.
All right, plenty of stock-specific action coming in this morning. These are some of the stocks that are on our radar today, specifically on the back of their third quarter updates. So let's take a look here. Firstly, there's Lodha Developers. The company's reported a third quarter pre-sales up 25% year on year, and management says that this is keeping them track to meet this full year guidance. And collections as well have come in down 17%. So a little bit of a mixed picture on that front. Moving on, Godrej Consumer Products. India demand has strengthened progressively during the quarter, which is an encouraging sign. And the standalone business as well is expected to deliver double-digit growth, revenue growth, with margins reverting to normative levels. So on a consolidated business basis, both revenue and EBITDA are expected to grow in double digits. Clearly a positive update. Up next, Jubilant FoodWorks, with both standalone and consolidated revenues growing at around 12 to 13% levels. Titan, with their consumer business surging 40% year on year, and jewelry division also leading the charge with a 41% growth year on year. Next up, Credit Access Grameen with their monthly disbursements up 26% year on year. And the company also highlighting that their asset quality has normalized across major geographies. Finally, we've got Senco Gold with the company delivering 51% year on year revenue growth in the third quarter. And the management has said that they remain confident to target over 25% annual revenue growth for the full year of FY26 with clearly strong momentum. So these were some of the stocks to keep an eye on from my side here. Back to you in the studio.
Thank you, Meryl, for all of those updates. But let's move on and also tell you about many other stocks that are going to be in focus. Firstly, let's talk about IRB Infra. Now, this one is going to be in focus because the company's trust has received a letter of award from the NHAI. This is for a project worth 3,087 crore rupees. It's a TOT 18 project in Orissa. So yes, a positive news flow here, and hence the stock is going to be in focus. Next up, big boy Reliance is going to be in focus yet again because later yesterday, in the latter half of the day, the company did issue a clarification that it has not received any Russian oil in the month of January refinery at its Jamnagar refinery. So on the back of this clarification, the stock continues to remain in focus today as well. Next up, from the pharma space, we have Biocon, which is going to be a key highlight today. This one because the company has announced new launch of 3 affordable versions of popular cancer drugs. Now, these includes biosimilars for Keytruda and Opdivo as well. So yes, a positive news flow here as well. Biocon is going to be one to watch. Next up, let's talk about Acme Solar. Now, this one is going to be in focus because it has announced it has successfully commissioned additional 12 megawatt of wind power capacity in Surendranagar, which is in Gujarat. So yes, good news flow here as well. And next up, Mahindra & Mahindra from the auto space is the next big focus. A new launch coming up here, XUV 3XO EV. That has been launched at a starting price of 13.89 lakh rupees. So yes, big launch coming in here, and hence the stock is going to be in focus yet again. And lastly, we have lock-ins ending for several new counters, newly listed counters, Equities, Misho, Vidya Wires, Tata Capital. For all of them, the lock-in period is going to end today. So yes, these are also some of the counters we'll be watching out for. So yes, that's about all of the stocks that will be in focus in today's trading session. But definitely there are going to be several other cues that we must watch out for. And Snehi is here for all of those details.
Well, yes, lots of cues to watch out for. Not much happening back home, but globally, watch out for the ISM Services Index data from the US along with the JOLTS job openings. This is going to be a very important metric to gauge what the employment or the unemployment scene looks like in the US. From the Eurozone area, watch out for the CPI metrics. That's their inflation print. Shifting focus back home, the lock-in period is going to be ending for a bunch of recently listed companies like Equities, wherein 2% equity comes out of holding, which is the same case with Misho and Tata Capital, 2% each equity coming out of the lock-in period, and for Vidya Wires, 4% equity comes out of lock-in. Lastly, in terms of some other events to watch out for a Fed chair, Vice Chair for Supervision, Michelle Bowman's speech, going to be speaking at an event. So watch out for any cues in the speech in terms of the economic outlook, the state of the economy of the US, and anything else if the speech includes. So yes, watch out for all of these cues.
Alright, so several important cues that we must watch out for, but time now for a very quick break. We'll be right back to get you more updates on the other side. Hi there, welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar, and it's time now to put the spotlight on some exclusive stories that we have coming in. And as per sources, TRAI, the Telecom Regulatory Authority of India, has imposed penalties of 150 crore rupees on telecom operators for not doing enough to stop spam calls and messages. Now, this penalty relates to a period of about 3 years starting from 2020. Telecom operators have challenged these penalties and disagreed with TRAI's action. Charu is here to take us through the details.
So the Telecom Regulatory Authority of India has also come out with its annual report talking about how they have tried to curb the entire menace of spam calls and messages and all the fraudulent connections that are made to, sort of defraud the innocent customers. However, that aside, as per some sources that spoke to ET, now we have come to know that TRAI has also made a demand of over rupees 150 crores from telecom operators because they were not able to to curb the menace or end the customer complaints regarding these spam calls in a prescribed manner. So there are two reasons why this was done. Firstly, there is a prescribed norm in which the customer complaints regarding any sort of spam calls are supposed to be dealt with. If these customer complaints are not dealt with properly or are closed down in violation of the norms that are in place, then TRAI can put in its foot down and can impose penalties on the telecom operators. It also has norms about how much penalty it can impose. It can only impose about 50 lakh rupees a month in a licensed service area. So several instances culminated into several penalties, which now total at about rupees 150 crores. However, they have sort of appealed against it in a way. They have challenged the entire penalty that have been imposed on them, and it remains to be seen what other steps are taken by TRAI in dealing with the entire situation. However, apart from this, about 21 lakh connections that were spam connections were stopped in the last year itself, with over 1 lakh connections blacklisted.
All right, so that's about the action on TRAI action on telcos. Thanks, Charu, for that update. But now the next big focus, big boy Reliance, that was among the top Nifty losers yesterday. The stock declined over 4.5%, which is its biggest intraday loss since June 2024. Ashesha joins us with more on what this leads up to.
Well, yes, it's the biggest fall that we have seen since the 4th of June 2024. It has hit an intraday low that we have seen in the last 2 months, and we have seen a market cap erosion of nearly 1 lakh crore. That's the kind of move that we have seen in big boy Reliance Industries. Now, let's put the spotlight on some recent news pieces. There are several reports which suggested that Reliance has started buying crude oil from Russia, but the company has issued a clarification. They have informed the exchanges they have not resumed buying from Russia. In fact, they say that they are not expected to receive any oil from Russia in January 2026. It was in November when the company has said that they had halted import of Russian oil for its export-oriented SEZ at Jamnagar, and company has not received any Russian oil in the last 3 weeks. That's a clarification that the management has come up with. Now, I'll tell you why this is important. Remember, Russia supplies crude oil to India at a discounted price, and if Reliance Industries is not buying oil from Russia, it is not enjoying the benefit of $5 to $6 per barrel, which it was enjoying when it bought oil from Russia. This will directly have an impact on companies' margins and profitability. Gross refining margins as a result of this will be impacted, and if at all the company resumes buying oil from Russia, that of course will be a positive for the company's profitability going forward. Now, let's also put the spotlight on some risks that the company faces at this point in time. One, of course, is on account of sanctions and trade restrictions, which could have an impact on sourcing of oil by Reliance Industries from global players. Delay in telecom tariff hikes. Although the expectation is that the telecom industry, led by Reliance Jio, will undertake a price hike to the tune of 15 to 20% before Reliance Jio gets listed. But there is always a risk which the industry is perhaps factoring in. Higher capex and long gestation period could delay returns from solar and battery. Remember, they have invested a lot for their solar business, and if at all there is any kind of delay on that front, that also continues to weigh heavy on the stock. Large ongoing investments across business is likely to weigh heavy on their cash flow going forward. But yes, for now, one of course is the fact that they are not expected to resume buying oil from Russia, which is likely to have an impact on gross refining margins of the company going forward, and that is precisely the reason the stock is down nearly 5% in trade.
All right, so that's about Reliance and the stock action and why the stock has been slumping in trade. But now, here's an 18-hour exclusive. Now, the groundwork on India's biggest ever IPO, that has begun. Sources have told ET Now that Reliance Industries is working with 2 investment banks on preparations for its IPO of the telecom unit, that is Jio Platforms, and DRHP filing is expected in 2 to 3 months. Anurag Joshi is here to take us through the details.
Reliance Industries is working with 2 investment banks on preparations for Jio Platforms IPO, which is likely to be the biggest ever initial public offering from India so far. Kotak Mahindra Capital and Morgan Stanley have started working on the Jio Platforms IPO, and the hiring of banks and the process of filing the draft equity document with the Securities and Exchange Board of India and the stock exchanges could happen over a period of the next 3 months. So the next 3 months will be very crucial for this IPO. Now, the early indications show that the valuation for Geo platforms could be at least $160 billion, and RIL will formally hire banks to manage the IPO. This IPO, when it happens, it will be the biggest ever primary equity raise. In fact, RIL chairman Mukesh Ambani said in August that the group is aiming to list Geo by June this year. And the planned Geo platforms IPO will meet the threshold of the new minimum public offer norms of the Securities and Exchange Board of India. So the size of the IPO is being pegged in the range of $4 billion to $6 billion. Looking at the pre-IPO market cap of the company, the valuation of the company. In fact, in 2024, Hyundai had raised $3.3 billion through its IPO, which until now is the biggest ever IPO in India. If you see the revenues of Geo platforms, it was 36,000 crores in the Q2 of FY26 and the EBITDA margin of about 52%.
All right, thanks Anurag for that update. But let's move on and also tell you something more that's happening as far as a crucial hearing yesterday was concerned. Now, APTL that has sharply questioned the way market coupling rules were framed, saying that the power regulator should have acted quietly and independently without any theatrics. Now, in submissions before a court bench, the Indian Energy Exchange has urged that the order be cancelled or at least stayed until the case is decided, warning that the coupling would harm exchanges instead of encouraging them. So the tribunal also raised questions or queries about allegations of insider trading and has sought updates on SEBI's investigations. Let's go back to Charu to get us the details from the courtroom.
The CERC decision to come out with market coupling norms for the energy exchanges of the country seems to be coming under authorities' scrutiny every now and then. While on one hand, the market watchdog Securities and Exchange Board of India came out with a preliminary order worth rupees 173 crores saying that there are allegations against the CERC officials who were involved in the policy of the market coupling, also benefited from the entire stock price fluctuations that happened as a result of the policy that CERC had brought forth. On the other hand, IEX is involved in running a case against the CERC order of market coupling norms. It says that it is completely against the laws of natural justice. It also says that this is not the right way to bring it forth. More examination and conversation around the entire topic needs to take place. It is also going to curb the market share of IEX and is also going to affect its business and its position in the market. Apart from that, IEX has also maintained its stance that if we are going to follow the antitrust principles like those followed in US, especially for market coupling for energy exchanges, this is not the right way to do it, and more shadow piloting needs to be done in the entire case. Apart from this, APTEL, while hearing the case, also said that the entire process of bringing out the market coupling norms has been made very dramatic and theatrical by CERC, and it should have been done in a better planned and more independent manner. However, no order has been made against CERC or IEX or any other sort for now. The hearing is going to continue for January 9, that is on Friday this week.
All right, so that's about the IEX coupling case. But now let's put the spotlight on the consumer space. Now, consumer durable companies, they're hiking prices due to input cost surge. Now, ET Now has learned from several consumer durable companies that they're hiking prices across ACs, kitchen appliances, and also cookware. This is to protect their margins as copper costs have surged nearly 40% since October of 2025. Anjali Palod is here with the details.
Right, so we are seeing the impact of the surging copper prices in the consumer durable space as well, wherein some companies have hiked the prices in the range of about 5 to 8% across categories such as ACs, kitchen appliances, and even some cookware. Now, Wonder Chef, for example, has hiked the prices of about 70 to 80% of their products starting 1st of January, and these hikes have been in the range of about 5 to 7%. Meanwhile, Godrej Appliances have said that they will will be increasing the prices of all the newly produced air conditioners by around 7 to 8%. Now, this is being largely attributed to the surging commodity prices, especially copper, which have led to the prices surging by around 8 to 10% in the case of Godrej appliances. Now, just to let you know, copper has surged by 40% since October 2025, and that is now weighing in on these consumer durable companies as well, wherein they're passing on this extra cost to the consumers in order to protect their margins. We're also learning from certain sources that the smaller brands which cannot afford to increase the prices as of now are in the affordable category, are now replacing the copper with aluminium in the motors, as that is a cheaper alternative. But all in all, if you look at the air conditioner space, which had a GST advantage come in with the rationalization of the GST rates, is now seeing some some trade-off in that pricing advantage, with the copper prices surging as the prices have inched up again, sort of negating the GST rationalization impact. But overall, the consumer durable space is where you will see things getting a little more expensive as copper prices are surging.
All right, thanks Anjali for that update. But moving on, the China Plus One strategy isn't automatically India's gain. That's what former RBI Governor Raghuram Rajan believes. Now, in the latest edition of the interview, he explains why Vietnam and Mexico are winning and why quality of life, policy certainty and skills still hold India back. Let's listen in.
Logistics, as I said, has improved tremendously in India. The quality of infrastructure is much better. But if you want FDI, you also want quality of life. And this is where, having a gas chamber that Delhi has become as your capital city is not good advertisement. Of course, other cities are much more livable at this point, but it is something to pay attention to. Bangalore, everybody complains about the traffic. So quality of life is another issue. Business certainty is important. I just saw an academic who told me about this paper they were working on, which suggested that the Vodafone retrospective taxation did have a tremendous negative effect on FDI. Now, I haven't seen the paper. I don't know the quality of the analysis, but I wouldn't be surprised that the constant sort of shifting of our regulations based on either the needs of the bureaucracy for safety and protection or needs of business for protection against foreign entrants keeps our business environment very uncertain. I mean, nowadays, where is the tariff going to go up? Is it going to be on my inputs? We need a stable tariff regime at very moderate tariffs rather than at high tariffs if we are going to be part of a global supply chain. So these are the things we need to work on. Of course, our labor force needs to. We keep saying 1.4 billion Indians. That's great, but how many are trained to do the kinds of jobs that are coming in, and how many are willing? You need both the skills as well as the willingness to take up those kinds of jobs. We need more effort here, but things in India change, and they are changing in the right direction. They often take more time than you would wish. Tough part is the world is moving ahead. We don't have the luxury of a lot of time, so we need to move also.
All right, so stay tuned for the full episode. But with that, time for a very quick break. We'll be right back with more on the other side. Hi there, welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar. Well, now all eyes are going to be on the budget, that is upcoming budget 2026. And ET Now's Budget Yatra has rolled into Chennai inside one of India's key manufacturing engines. Now, automakers and tire makers, they've flagged tariff stress, raw material shortages, and also R&D incentives, as well as inverted duties as some of the concerns. Jude is here to get us this ground report on the industry's budget wish list.
On our Chennai episode of Budget Yatra 2026, join me as I hit the road and get a pulse of the movers and shakers of India's auto component sector. So from the impact of the Trump tariffs to supply chain bottlenecks, how is a 100,000 crore rupee industry getting by? And more importantly, what does the component manufacturing ecosystem want from Budget 2026? Find out all that and more on the Chennai episode of Budget Yatra, January 8th and 9th at 4 p.m. only on ET Now.
All right, so stay tuned to ET Now's Budget Yatra. We'll keep getting you more updates and the wish list from across industries as far as the Budget 2026 is concerned. But now let's talk about the consumer space. And we do have mixed Q3 updates coming in for Jubilant FoodWorks this time around. The Domino's Pizza operator has seen a jump of just about 12% in its revenue, while the like-for-like growth was slowest in a year. Now, what are some of the other key takeaways from the Q3 update and what are brokerages making of it? Snehi is here to take us through the details. Snehi, over to you. Good morning.
Well, yes, so Jubilant FoodWorks in focus on the back of its Q3 update. Consolidated revenue from operations has come in at around 2,438 crore rupees, which is up roughly 13.5% on a year-on-year basis. This is slightly a beat compared to the muted estimates that the street was having, but still this is their slowest growth in quite some time now, because remember, at least this is the slowest growth in this financial year, because it was 15.8% year-on-year in Q2 and 17% on a year-on-year basis in Q1, and that's moderated to just 13.4% this time. Standalone revenue growth is up 11.8% on a year-on-year basis, in line with the street estimates. Let's talk about the like-for-like growth. Domino's India like-for-like growth has come in at just 5%, which is the slowest since Q3 of FY25, basically the slowest since the last 1 year. It's a miss versus the estimate of 7%, because Domino's India like-for-like growth is between 12.5%, then it came to 12.1, 11.6, 9.1 in the previous quarter, and now just 5. So that deceleration over there is quite prominent. Domino's Turkey like-for-like growth has come in at 6.3%. The store network overall net addition of 114 stores in the third quarter, total 3,594. Domino's India opened 75 new stores in Q3. Total is 2,396. Remember, they had said that they aim to reach 3,000 by FY28, and Domino's Turkey opened 15 stores, total at 783. Quickly taking you through what the brokerage reactions have been. Jefferies has maintained its buy rating but cut the target price to 850 from 1,000. Goldman Sachs maintains neutral, cuts the target price to 560 from 650. Elara Capital has maintained buy, target price at 780 rupees per share. Morgan Stanley maintains overweight, target price at 775. So the street is also largely divided on what to make of this Q3 updates. Price cuts by some of the brokerages, but largely seems mixed. But yes, the like-for-like growth is very weak.
So that's about the brokerage take on Jubilant FoodWorks. But Snehi, before we let you go, Titan is also going to be in focus, and this one has seen strong Q3 updates. Now remember, the jewelry majors' consumer businesses, they have surged 40% on a year-on-year basis. With international and domestic segments, they've also seen gaining steam this time around. Jewelry sales, they've jumped about 41%, driven by price increases, while watches and eye care, they've also seen significant growth. Take us through what the brokerages are making of this.
So first of all, let's understand what Titan's Q3 update looks like. Strong set of numbers coming in. Consumer business total growth of 40% year-on-year in Q3. Net store addition of 56. Total stores now at 3,433. For the domestic business, growth in Q1 was at 38% year-on-year. Strong figures over here. Net store addition of 54. Total stores at 3,399. Let's break it down segmentally. And jewelry, overall growth of 40% year-on-year basis. Very strong move coming in. They say that festive demand has aided sales. There's been a substantial increase in the average selling prices as well. Tanishq Gold Exchange program has done well. Gold coins nearly have doubled in sales on a year-on-year basis. Plain gold category has also seen a jump up of growth of late 30s. Very solid move here. Studded has clocked its best performance of FY26 as a studded diamond jewelry segment. And the like-for-like growth across the jewelry formats is in low 30s, which is absolutely very healthy. Remember, they've also launched Beyond, which is the lab-grown diamond offering later in the third quarter, and they've added 47 new stores across jewelry formats. For watches, overall growth of 13% year-on-year, led by analog segment. 17% growth over there. Titan brand has posted double-digit growth, so very strong over there too. Eye care overall growth of 16%, some recovery seen over here. It was led by healthy performance from both international as well as house brands. Emerging business overall growth of 14%, slight pullback over here. Fragrances is up 22%, but women's bags, their Irth brand has done very well, more than a double jump on a year-on-year basis. Taneira is negative 6%, so this is something to watch out for. International business continues to be strong, a 79% year-on-year uptick. GCC, Singapore, North America did well, and Tanishq also added two new stores in North America. Taking you through what the brokerage reaction is, Goldman Sachs maintains its buy rating, but the target price has been hiked. Similarly for Jefferies and JP Morgan also, they've maintained hold and neutral respectively, but hiked the target prices. UBS maintains buy, target price 4,700. Macquarie, Nomura maintain outperform and maintain buy. And then you have Citi that maintains neutral, target price 4,125. And Morgan Stanley maintains overweight with a target price of 4,062 rupees. So that's a roundup on Titan's Q3. Jewelry performance has been very strong.
So that's about Titan. But Snehi, Godrej Consumer, that has also come out with its Q3 updates. What are you picking up on that front? Positive commentary coming from the company, and across segments, it has seen mostly double-digit growth, right?
Absolutely. So, Godrej Consumer Products is also in focus on the back of its Q3 business update, which seems largely good because on the demand front, they've said that demand conditions have strengthened in the Q3 and they remain confident of gradual improvement in consumption overall in the quarters to come. At a consolidated level, their rupee revenue has grown in double digits. The estimate is 18%. So, as long as it meets that mark, it's good. For the Q3 update then, standalone business is expected to deliver double-digit revenue growth. The street was working in with only an 8% figure, so very strong beat over there. Underlying volume growth is expected to be in double digits. Once again, the street was expecting this number to be around 8%. So another very good show, and in fact a beat on the volume estimate as well. For home care, double-digit value growth is expected, beat versus the estimate of a single-digit number, that 8% number that we were expecting. Personal care also mid-single-digit value growth due to recovery in soaps. Soaps has seen a very sharp turnaround this time. On the back of that, they're saying standalone EBITDA margins to once again come in the normative range, which is 24 to 26%. So once again, very strong recovery on the margin front also is something that they've guided. Internationally, a slight concern in the international business. Indonesia, they're saying competition is very high, but they're seeing early signs of stabilization, and revenue and PAT are expected to improve from FY27. The GOM segment, which is Godrej Africa, USA and Middle East, is on track to deliver the FY26 guidance of double-digit top and bottom line growth. So that's the update. Some quick brokerage reactions. Jefferies has maintained buy, but target price has been hiked to 1,500 from 1,400. Nomura, UBS, Nuvama, all three of them have maintained their buy rating and their target prices, and Morgan Stanley maintains overweight, target price at 1291. So that's the update coming in from Godrej Consumer. They're expecting more recovery in demand in the future, but largely seems good.
Thanks, Nehi, for all of those updates. Looks like a busy day coming in for you from the consumer space that you track very closely. But with that, we're completely timed out in this edition of Market Cafe. I'll take your leave, but don't go anywhere. The market is coming up next.